Hey guys, how's it going? Looks like we have a few people in here a little early, so I'm gonna give it a few more minutes. I'm gonna get this online on everything, and then if you guys have any questions, feel free to put them in the Q&A, and I can go over any pairs you guys want me to go over, or any K2 strategies. So yeah, welcome guys. I'm gonna give it a little more time for people to come in, but we can get started pretty soon. All right. Let's see if Aaron's here. Send this over to Aaron real quick. Anonymous Tindy said just here for support. Hey man, how's it going? I don't know who that is, but yeah, thanks for showing up. But yeah, so it looks like people are still rolling in right now. So if you guys have any questions, feel free to put them in the Q&A. Otherwise, I'll just look at the active trades we have right now, and I'm probably going to keep looking through the pairs if there's anything else to take right now. It looks like the market's moving pretty slow. I was going to take this euro odd position right here, but it's just really slow since we just went through the swap spread. And we're probably not going to see much movement until, let's see, until news, because there's news coming up in a little bit. So there's news in about 2.5 hours. It's AUD news, so it's probably going to affect the market pretty heavily. It's their GDP news, so let's see. So they're forecasting -6. So it's looking like their GDP is not going to look very good. So it's probably going to be working against the Australian dollar. So if that's the case, then this is probably going to shoot upwards. And that's why I didn't want to take it. Because, obviously we don't want to be on the wrong side of the trade. So we'll probably hold off on this till later. Maybe after news happens at 6:30, which is in about 2.5 hours. We can probably look deeper into this trade to see how the market reacts to the news release. But let's see. Hey, Brian, how's it going? Let's see who else is here. All right, cool. Looks like a lot of people are showing up right now. I did start a little early today, just to give you guys some time to show up so we have enough time to, pretty much go over everything. But yeah, if there's any strategies you guys want me to go over, I know there's some people that were asking me about the pivot strategy. I can go over that today. But if there's any other strategies you guys want me to go over, or, anything in general, I'm free to go over anything, because this week's been a pretty slow week overall. So there's probably not going to be very many moves. But I'm going to go through every pair anyways, just to analyze and see if there's anything that we can take. But like I said, I'm going to wait until the news passes. We have the Aussie GDP news at 6:30 p.m. So this is probably going to affect the market pretty heavily. Like you can probably see, things spike like crazy today, because generally Australian news does have a high impact on pretty much every pair, since it's the heavy currency during this time, since we're in the Aussie market. But this news specifically is GDP, so it's for sure gonna affect the market one way or another, and we just don't want to get caught on the wrong side. But yeah, so let me just go through all the pairs right now. I'm just gonna scan through them, make sure all of our zones are on properly, just so that once it hits 6:30, we can hit the ground running and start picking out trades. So let's get started. All right, so we'll get started from the top. Odd Cad. So for this pair right here, it's in a strong uptrend, and that's because price is above the pivots. The pivots are all angling upwards, and it looks like it's going to continue up. So in order for us to take a trade right here, we would need a buy signal, which would be something like this, and we would want it to break the K2SR zone and close above it. So if we get a buy signal and it closes above this zone, then odds are it's probably going to go and test the next zone right here. So we can take a buy entry if that happens. Similar to what happened right here. Pretty much we got a buy signal, it broke the zone, and then it shot up to the next zone where it rejected, came back down, and then it did the same thing again right here. We got a buy signal, broke the zone, and it shot way all the way up here. So that's what I'm anticipating for Odd Cad. But yeah, we would have to wait for some sort of entry before we decide to take this trade. So I'm going to keep that in mind. I have it marked here because I've been waiting for it all day. I was waiting for it over here when the market reopened on, I think, Sunday. Yeah, so this was Sunday. And then I was waiting for it to break above. It never did. And then again, right here, I was waiting for it to break above. So it's, it's a waiting game. You just have to wait for the best opportunity to enter this trade. But it doesn't look like there's going to be an entry anytime soon, especially with the news coming up. Probably when the news happens, it's going to shoot up, and then it could provide for an entry for us. This is our odd CHF position from earlier. It looks like it's about to hit TP2 right here. So we already hit TP1 for, let's see, what was it? So our odd CAD, or no, odd CHF, hit TP1 for a gain of 9 pips right here. So that was pretty nice. It hit it, and then it came back down, and then it shot back up. So that's still looking good. Technically, that's still active. I got stopped out at TP1, but a lot of people are still in it, so it's still looking good so far. Odd JPY. This one is extended way too far. I was waiting for it to come down because the next zone is way up here. So this is a big push. It's like 200 pips. I'm looking for an area closer because I don't want to get into this trade and then it comes down and then it shoots back up. It's pretty much an open field right now. So I would probably wait for, some sort of retracement, like a sell signal like we had right here. So I'd wait for a sell signal, push it down a little bit. And then I'll take that buy signal, like right here, correcting back upwards so we can ride that momentum swing upwards. But it doesn't look like there's anything here. Let me see if there's any zones that are nearby, because that's what I'm looking for more importantly, because you don't want to get into a trade and then it's hitting a resistance, So I'm pretty much looking for any resistance so I know where not to enter. But it doesn't look like there's any resistance coming up anytime soon. There's not even a daily resistance coming up. I think the closest one is the weekly. Yeah, so this is the weekly resistance up here. So it's got a long way to go in this direction, but we'll see. There's also, because of the odd news later today, that could affect it heavily since the odd news is supposed to be bad. It's negative 6%. The last time was negative 0.3. That's a huge jump. So if that happens and it's that bad, you could anticipate this to actually shoot way down here. And this is a big drop. So if you count this from here, that's 140 pips. So, we might be taking a sell. We'll see how it plays out. I might even take a risky trade here. You can take a risky trade and put like a sell stop somewhere right here so that if price does spike down, you can just catch that wave and then ride it down. But it's just too risky. For me, it's too risky. If you want to take a risk, then it would be a decent sell if that plays out. But the news isn't going to be guaranteed. Even though it's bad news, that doesn't mean that the market's going to react, that's in that specific way. It might even have a late reaction. It might just go sideways like it does sometimes. And then an hour later, it'll just spike down. So it's a little tricky, but we'll keep an eye on that. Odd NZD. Yeah, odd NZD is inside the zone right here. So what might happen here is it might drop further to test this lower zone and then reject on upwards. So, me generally, I don't like to trade within these zones. I like to trade outside. So if this breaks below it, like down here, so if this breaks below right here and closes below it, then I anticipate it to continue downwards. And that's because we have a downwards trend right here. As you can see, price is below the pivots. So that's indicating a downwards trend. So if it does break below here, that's a pretty good confirmation that price is going to continue downwards. So if that happens, then I would take a sell. It might even come test the next zone down here. And, depending on how strong it moves, it could continue even further. And this will probably correlate with the news if the news is bad. Because if the Australian news is bad, obviously it's going to head down. A lot of people aren't familiar with, how pairs move. So basically, if the price is moving upwards, that means that the first pair is gaining strength against the second pair. And if it's coming down, that means that the second pair is gaining strength against the first pair. So it's kind of like a seesaw. It's what I always explain to people. Basically if price is going up, it's because the Aussie is strong. If price is going down, That's because the New Zealand dollar is strong against that specific pair. So this might be a really good sell actually. So I'll just mark that. If the Aussie news is bad, which it's supposed to be, I'm assuming it'd be bad because of COVID, but who knows, you know, it might be manipulated and might go sideways before it drops. But yeah, so this would be the K2 SR zone strategy. I'll give you guys an explanation if we have an entry later, but there's just no entry right now. But if I do see this break below, then it would provide for a good entry right there. So what else we got here? Odd USD. This is an active trade we have. This dropped because of the US news this morning. So we did ISM manufacturing news. And I think it was, actually, no, it was good. So it was good news for the US dollar. It was, the previous number was 54.2, and they were forecasting a small increase, but it actually increased by 2 points right here. So since this news was good, that's why the US dollar is gaining strength. Like I mentioned earlier, if price is going up, the Australian dollar is stronger than the US dollar. But if price is going down, the US dollar is stronger than the Australian dollar. So that's why it's coming down right now. We did hit TP1 already, so that's where I got out. I know some people missed that because they were sleeping. This happened at about, let's see. This happened about 10 p.m. Pacific Daylight Savings Time. So if you're, LA time, you were probably awake when this happened. You were able to get out. But people on the East Coast, that was like 1 a.m. for them. So they probably missed this exit. But we'll see how it plays out. Like I mentioned, if the Australian dollar is weak, it's probably going to shoot down further. But if it goes sideways for a bit, it might reject off this point, the K2 pivots, and shoot on upwards. So it's really going to depend on, how the market reacts to the news. The market doesn't always react, the way that we assume it would. So I wouldn't base it directly off that. We'll just have to see how it plays out. Cad Chf. So this is an entry right here using the same strategy, the K2SR zone strategy. So this was an entry right here, but the reason I didn't take it is because it's just too close to the next zone. So like I mentioned, generally when price breaks a zone like this, it usually goes up and tests the next zone. And that's what happened here. Price came up, it tested the zone, then it went sideways. It broke the zone again right here. So what's probably going to happen is it's going to shoot up to here and then probably either reject or go sideways or break through it. So, there's 3 different ways that price can move once it reaches this zone. But the reason I didn't want to take it is because it's just a little too close. So if you measure this from here, it's only about 18 pips. Generally, I like there to be at least 20 to 25 pips in between each zone. That way you can lock in some pips and exit the trade safely with some profit. The spread here for myself is 3.2. This is considered a somewhat tight spread for this pair. So if you're using a broker that's unregulated or the spreads aren't good, then your spread's probably going to be about like 5 or 6 pips. So the problem with that is if you enter this trade right here, you're going to have to give up 5 or 6 pips right here before you make any profit. So it's just a hassle because if you try to exit up here, you're going to have to pay the spread exiting as well. So you have to exit. So there's 6 pips right there, 6 pips right there. You're probably going to lock in about, under 10 pips. It's not worth the risk because if you enter this trade and it rejects on you, then you're going to be stuck in that trade until it pushes up further. That's why I didn't call this trade. However, this is a valid trade. So, if we come back and look at this, it's probably going to come up and test the zone here before, either breaking above it or rejecting below. But we'll see how this plays out. Let's see what else we got here. So Cad Jpy. This would actually be a nice buy. So the thing with this is, like I mentioned before, the first thing I do is I identify where the K2SRs are because I don't want to be trading in these zones right here because price generally rejects off them. So price pushes up, rejects off the zone, comes down, rejects off the zone, and then comes up. And it pretty much just bounces from zone to zone. So this situation right here, you wouldn't take a sell because price is trending up. And you also wouldn't take a sell because it just rejected off this zone. So since it rejected off this zone, it might shoot up to this next zone over here. But it doesn't provide for an entry until we have, all the requirements met. So basically what we would need to have here is a sell signal. It could be a false sell signal like this right here. and then we would need a buy signal after that. Or we don't even need that. So if price comes down and then breaks below the zone or breaks into the zone, once it closes outside of it, then we can take a buy entry right here. So that's one scenario. Another scenario is we could get a false sell signal or a pullback like this right here. And then once we get a buy signal, then we can enter a buy right there like we could have done right here. And I'm pretty sure we took this trade actually. So if we took this trade, we would have profited about 50 pips right there. Same situation right here. Once price broke this zone, like I mentioned, price generally goes to the next zone, then it rejects off like it did right here, and then it corrects back upwards to the overall trend. So, I mean, there's a lot of different scenarios that you guys can analyze this but you won't really know until you have extra confirmation and that full catalyst giving you the entry. So I'd probably hold off on this, but I do see it continuing upwards due to the the strong trend. Plus, it's rejecting off this K2SR right here. So I'd probably hold off on this right now. Chf Jpy. Yeah, it looks like price came up, came down, rejected off the K2SR, came up, rejected off the K2SR. And then, like I mentioned, price basically goes from each zone. So it goes from up to the bottom zone, to up, to down, to up, to down, to up, to down. And then pretty much it's just going to range. Like right here, this could either come down to here and then shoot back up, or break below to the next zone and then shoot back up, or continue downwards. I mean, there's a lot of different scenarios that can play out here. It looks like it's switching to a downtrend though. As you can see right here, it's already attempted, 3 times. So this is the first try. It failed. It shot back up. Came down for a second try. It failed. Shot back up. Came down for a third try. Right here, this could either come down or it could shoot back up, like, pretty much like how it did right here. It looks like it's stuck in a range right now. So this is why I wouldn't be taking this trade until I get an extra confirmation or some sort of catalyst pushing price in a certain direction. Unless you want to scalp within here. Let's see how many pips. Actually, you could make a lot of pips just scalping within because this is a big zone right here. So literally right here, if it rejects off and then you get a buy signal like right here, you can literally just ride that up to the next zone, up to here. So if you took this trade right here with this buy signal, you could have made 60 pips right there. And then again right here, another 60 pips, potentially. But you probably would have put your target like right here. Because like I said, price generally rejects off these zones. So you don't want to hold on to it past the zone. Basically what you want to do is you want to ride it up. And then you want to move your stop loss and profit once it reaches this area. So once it shoots up like this, you want to move your stop loss somewhere around here so that if price was to reject back down, you'd have gone stop down and profit. But yeah, like I've been mentioning, there's no entry here for us. Let me see what the next K2SRs are. Yeah, there's too many zones right here. So as you can see right here, there's a bunch of zones. So what might happen here is price is probably going to reject off it and then test this next zone up here. But we'll have to give it some more time before we make a decision whether we enter a trade like this or not, especially with the Aussie news coming up. Let's see. So your odd. This is what I went over earlier. So it's in a super downtrend right now. We're not even in this trade. This is the trade that I was going to call, but like I mentioned, there's Aussie news at 6:30, which is in about 2 hours, and it's supposed to be bad. So if it's bad, then this is probably going to be going up, because like I mentioned earlier, if price is going down, that means that the second currency is stronger than the first currency. But if it's moving up, that means that the first currency is stronger than the second currency. And the thing with the news that's coming up, it's supposed to be bad news for the Aussie. So if the news is bad for the Aussie, obviously price is going to go up. So that's why I didn't take this trade, even though we had a valid entry right here. I'd probably just wait and see how it plays out. I also wouldn't want to go against the trend, even though it looks like a nice buy, due to the news. The trend down is super strong. You can see just by looking at the K2 pivots right here. Generally, if price is below the pivots are angling downwards and they're spread out. That gives you good confirmation that price is trending downwards. You know, vice versa, price is above the pivots are angling up and they're spread out, price is trending upwards. So if you guys have access to the K2 indicators, you know, every K2 indicator is used for a specific reason. They pretty much cover all of the important aspects of technical analysis. Like you're able to identify the trend, you're able to identify rejection points with the K2SRs right here, and then you're able to identify momentum using the K2 momentum indicator. And it makes it really easy because, like I mentioned, price just moves from zone to zone. So as long as you trade in the direction of the trend and you enter when trades, you know, cross these zones right here, like happened right here, you could have locked in like 100 pips right here. Same thing right here. Price came down and then it came above right here, closed above the zone. You could have entered this for buy, another 100 pips. It's the same thing every single time. Same situation right here. Price broke below and then it closed below the zone. You could have entered a sell, 100 pips right there. Same situation here. Price broke below the zone, another sell right there, another 100 pips. Again, right here, broke below the zone, another sell right there. And then you probably would have gone stopped out and profit somewhere around here before it reached the zone. And then again, right here for another sell entry. But the reason why we didn't take this trade was because of the news coming up soon. Sierra's asking, how do you fill the spaces on the K2SR V2? Hey, Sierra. So let me show you real quick. So basically, I was looking at EA real quick. And the way that I do it, so this is pretty much how I'll analyze a trade from scratch. So this is what your chart would normally look like. You know, nothing on the chart, clean naked chart right there. What I do is I add the K2SRs on the chart. And then you can see all these zones right here. So you're asking, you know, how do I fill the spaces? So basically the way that I fill the spaces is I will just open a rectangle tool, which should be right here. And then I just draw my zones over the K2SRs. And the reason I do this is because you can see right here that the SRs, they kind of overlap sometimes, right? So generally, if these pips, you know, if these zones are too close, they're only 12 pips, you might as well just connect those zones to make them one big zone. So, you know, in that situation, I'll just draw my zones like that because they're so close to each other. And it's really plug and play, you know, it's up to you how you want to connect the zones or not. You don't have to connect the zones. You don't even have to draw the zone, like, you know, the filled in zones if you don't want to. I just feel like it makes it a lot easier for you to identify where the zones are and, you know, where you should avoid trading, because obviously if you're trading where the zones are, you might get caught in a reversal or something like that. So basically, you know, that's how it looks like with the zones on. And then if you hide the zones, there you go, it looks perfectly nice. You can see that price goes from zone to zone. And then you basically just trade from, you know, rejection off the zone, buy signal, you take it up, sell signal, take it down, buy signal, take it up, sell signal, take it down. You know, same difference, super simple. Oh yes, yeah. So once I draw the zones on the chart, then I'll just hide the K2SR. So, you know, you can see right here, this is what the K2SR looks like. It's a little messy, so it's hard for you to really look at the chart. I mean, or it might not be, it might be easy for you. So the thing is, I take it off because I don't want to confuse people with all the lines on the chart, although, you know, I can trade with them on. But, you know, if you want to clean up your chart, you don't want to have all these lines up. You could just click the this button right here, the hide button, and then you get clean zones on the chart. And then you can always adjust them however you want. You know, generally, before I enter any trades, I usually turn on the K2SR, and then I try to see if there's any new zones on the chart, because, you know, new zones will be established as price moves. And if you guys aren't familiar with the K2SRs, basically what they do is they automatically plot rejection points. So these specific rejection points have been tested at this same exact price at some time in the past. So if it's tested, you know, more than 2 times, it creates a new zone. So odds are, if it goes to that same exact price point more than twice, you know, odds are it's probably going to reject off it again a 3rd, 4th time. So if you guys aren't familiar with it, basically I'll just rewind over here. You can see all these zones on the chart, and then as price moves, it will create new zones for you. So it pretty much takes out all the guesswork. So you don't have to go and waste your time drawing out zones or drawing out support resistance. It pretty much does everything for you. So, you know, like what a lot of people say in K2, it's just like a little cheat code. Because instead of wasting your time drawing these zones, you know exactly where they are already. And it just lets you trade a lot more efficiently, because, you know, a lot of people, they'll take hours drawing support resistance, because it's the problem with drawing your own support resistance is that it's so subjective. Like the way that you see support and resistance might be totally different from what someone else sees. So like if I was to hide these zones right here, right? So I hide these zones, you know, a normal person would, you know, probably classify like this as a support. And then maybe like this as a resistance. And then, you know, maybe this as a support. And it just looks messy. Like, you know, it doesn't really look like the zones really connect. And it's kind of hard to read. But so like this is like a normal zone. If you guys draw, you know, your own support resistance on the chart, you know, this might be another zone for you down here. And the thing when you're drawing zones for specific pairs like EA, there's a lot of wicks for this specific pair. So it's really hard to identify, you know, where the actual support resistance is. And you can see right here, it's super hard to see. But if you were to use the K2SR indicator, see all these zones are already drawn for you. So although I was able to spot, you know, some zones, I missed a lot of other zones. Like I missed this right here. I missed this area. I missed this whole area over here. So this is just messy. But if you were to draw them with a K2SR indicator, you can see that they make a whole lot more sense. And like I mentioned, you know, these are plug and play. You can literally draw them however you want. You don't have to draw them a certain way. It just really depends on, you know, what you're looking for. But you definitely want to cover all of the, you know, at least the big zones where they're heavily wicked. So we just hide that. And there you go. You get way more accurate zones right here where price rejects from. But yeah, so let me keep going over. Let's see. Yeah, sure, no problem, Sierra. We have one question from an attendee. Zones are basically areas of rejection. So, you know, obviously if you hit a high, like an upper zone right here, odds are price is going to reject off that zone. If price comes back to this lower zone where it's been testing for how long, like for like 21 days or even longer actually. So it's been testing the same exact zone for like 30 days for an entire month. You know, obviously a zone is like a rejection area. So basically they're areas where price generally rejects from. And, you know, one way of looking at it is the K2SR zones are like areas where, you know, banks and institutions have their algos. So, you know, obviously if they have their algos trading from these zones, you know, obviously you don't want to be in that zone because those areas are going to be highly manipulated. Because there's like specific price points where, you know, bank algos are trading. Generally, if price reaches that specific point, you know, the banks don't want price to break that point. So if that happens, they reject price off it. A lot of people think that there's a lot of sell orders in that area. But the thing with the Forex market is that it's such a big market that, you know, it would have to take a whole bunch of sell orders for, you know, someone to push the market. Most of these pushes are from the banks and institutions because they're putting in like, you know, $1 million trades. They're not putting in like $100 trades like all these retail traders are putting in. So that's like the main difference with, you know, currencies and with stocks, because stocks, you know, it's only like $1 billion market. So people can push, you know, penny stocks around, or they can push, you know, certain stocks around. But with the currency market, you'd have to have a lot of volume for you to push price around. Like you can't have like a whole bunch of people just taking sells and then expect that to cause, you know, price to move in a certain direction. And I think that's a big misconception that a lot of people have with the Forex market. It's not something that you can like push around with like X amount of trades. Yeah, so it looks like that's it for, you know, the current questions. If you guys have any questions, I know there's some new people here. If you guys have any questions, feel free to put them in the Q&A, and I can go over, you know, any trading theories that you guys have. You know, if they're related to K2, or analyze any pairs that you guys want me to look over. But currently I'm just going through pretty much each pair right now, trying to see if there's any entries. I'm just waiting for the next 4-hour candle close in about an hour and a half. We're also waiting for the news that's happening in 2 hours. So pretty much we're just going to be looking at the charts for, you know, pretty much setting up for any entries that are upcoming. But, you know, odds are we're probably not going to take a trade until after news happens, because we don't want to get caught on the wrong side of the trade due to news. So let me just keep going through the pairs right here. Right here, we got a sell signal. Let me see where the next K2SR zone is. So it's stuck within these zones right here. That's probably why it's consolidating sideways. So basically for this trade right here, I'd wait for it to close below the zone right here. So once it breaks the zone, then I could probably take a sell. But we'll have to wait for that because it looks like it's still got some ways to go. So let's see, it's got about 40 pips away. So it's got some time to go. Let's see what else we got here. Anonymous attendee said, I know you don't trade it, but can you give your opinion on gold? Yeah, sure. Let's go to gold. Gold is, there we go. So we got gold right here. And I'll analyze it just like I told you guys how I normally do. So I'll go from scratch. This is a naked chart right here. What I do first is I use a K2SR. And then, like I mentioned, I just draw my own zones over it. So I'll draw my lower zone right here, upper zone right here. Let's see. See, I don't like when there's too many zones. The problem with this is that once it consolidates like this sideways, it starts to create too many zones. Because like I mentioned, if price goes and tests a specific price, like so if price comes down and then rejects off the same exact price that it's tested in the past, it's going to create a zone. So what happens is it causes a bunch of like a lot of messy zones that are just put together right here. So let me see how this looks when I take it off. Actually, it's not so bad. So you can see price pushed up, retraced down, rejected off this zone, and then it shot up, rejected off this, came down, rejected off here, shot up, rejected off here. So let's see, we could probably remove these middle zones because there's not really too much that was happening right here. So this actually cleans it up a bit. We can probably, no, we can probably just leave this here because it looks like a pretty clean zone. So, you know, first I would, let's see. All right, I'll check that in a little bit. Javon put a question in the Q&A. Sorry, I'll go back to gold. So looking back at gold, it looks like price came up, came down. So once I have the zones here, I know, you know, where areas of rejection are. So price broke above it, then it came down right here. So if it does come back up right here, it'll probably test this next zone up here. It just really depends on other factors. So one factor here is I know where the zones are. So I know where areas of rejection are. After that, I'm going to turn on the K2 pivot so I can see where the overall trend is. So obviously it's trending up right here. You know, on top of that, I can use the trend meter down here. Basically, if you guys aren't familiar with the trend meter, if it's green down here, this shows that price is trending upwards overall on 4 different time frames. And I have them set to 4 different time frames right here, which are the intraday settings, which is the 30-minute, 1 hour, 2 hour, and 4 hour. So basically, when the trend meter down here is green, this indicates that price is trending upwards on the overall time frame for the day, intraday settings. So as you can see right here, it was green, and then price was obviously trending up. And then once it's going sideways, it turns blue right here because there's indecisiveness in those 4 time frames. So say if price is trending up on the 1 hour and 2 hour, But on the shorter time frames, like the 30-minute and the 15 minutes going sideways, obviously price is going to go sideways. So when it's green, it's trending up. When it's blue, it's going sideways. When it's red, it's going down. So instead of you drawing, having to draw, trend lines, you can just look at the trend meter down here. So obviously when it's trending down right there, it's red. When it's green right here, it's trending up. Oh shit, wrong tool. When it's trending up right here, it's green. When it's blue like it is right here, it's trending sideways. I mean, it's not trending, it's just going sideways. But that's just another confirmation. You don't have to use it, but if you want to have a full picture of how the market's moving, this definitely helps, because if you match this up with the pivots, what the pivots do is it gives you the trend for that specific time frame for the 4 hour. But if you want to see what it's looking like, on the other time frames, like I have set right here, the 30-minute, 1 hour, 2 hour, and 4 hour, you can put those together. So the thing is, if you have the trend meter where it's green below, and then you have, price above the pivots where it's, double confirmation for an uptrend, that gives you, a ton of confidence to enter this trade. And then on top of that, first I determined where the points of rejection are. After that, I wanted to determine what the trend is. So right here, price is trending up. And then after that, I want to turn on the K2 momentum indicator. So in this situation right here, I know exactly the direction of momentum. As you can see right here, price is trending up. We got a buy signal. That gives you confirmation for a buy entry, because obviously you want to trade in the direction of the trend, and then you want to enter when momentum's in the market. So you can see right here, we got a head start if you entered right here, and then you would have caught this like huge move upwards. Similar to right here, same situation. But if you get an opposite signal, like right here, if you get a sell signal and price is trending up, this is technically a retracement or some sort of pullback. Obviously you want to trade against the trend. However, if price breaks, so if price goes the opposite right here and then the trend shifts, then obviously you can take a sell. But you don't want to take a sell when it's way up here, even though you can get a head start. It's just too risky. But yeah, going to like where gold is currently, right here, we have a buy momentum candle. So right here we have a buy momentum signal, which is indicating that momentum swinging upwards. So pretty much right here, I would wait for this to break above. Well, technically there's an entry right here. So as you can see right here, we have a momentum signal, and then you can see that price broke above this K2SR. So once that happens, there's an entry right here. So technically, if you were applying the strategy yourself, you would have had an entry right here. So what I anticipate is that price is going to continue upwards. If you were going to enter this late, you'd probably wait for it to break above it, like it did right here, and then it would provide for a new entry right there. But what I see happening here is I see price just retracing downwards, and then I see a rejection of the K2 pivots. Obviously the K2 pivots are self-explanatory, but they can be used for many other things. They can be used to determine the overall trend for that specific time frame, or they can be used as pivot points. So you can see price comes down, and then they're pretty much active pivots. So as price moves, so do the pivots. So if you go over here, and then you see where price is right here, you can see that when price comes down, it comes down and tests the pivot. So you can see this nice rejection right here. If you got this nice rejection with this nice bottom wick off the pivot, this could provide for a buy entry. If you understand how to take entries on your own, you could have taken a buy right there because that looks like a nice rejection. And then as price pivots off, it goes and hits TP right there. Same situation right here. See, price comes down, it rejects right off the pivot, and it's a strong bullish candle. So obviously if that happens, odds are it's probably going to continue up. And then what happens right there, it does continue up. So there's a ton of ways to apply, the K2 indicators, but all the K2 indicators are meant for a specific reason. They cover some sort of foundational checklist that you need when you're identifying, a trade, because there's only a few things that you really need to know when you're trading. You need to know the direction of the trend. You need to know you need to know areas of rejection, So for one, you know the direction of the trend. For two, you know areas of rejection, which, you know, in other words, could be support and resistance. And lastly, if you know the direction of momentum, you can tie all those things together and pretty much know exactly where price is going to go next. Because obviously, if price is trending up and then you get a buy signal, you know, where is it going to stop at? It's going to stop at the rejection point. So if you have the rejection point, you know where to exit the trade. Same situation here. As price broke below and it went below the pivots, turned into a downtrend, you could have entered a sell right here to the next zone. And then again, same situation right here, a buy signal, momentum's going up. Obviously, you could take a buy right here, ride it to the next zone, and then pretty much just do the same thing over and over again. So right here, I see price rejecting off the pivots, like I mentioned, you know, earlier on this side. But once you get a nice rejection, so if we get a nice, you know, wick below and then a strong bullish candle, like something like this right here, then we could probably see that shoot to the next zone up here again. But you would just have to wait and give it some time, because we do have the Australian news coming up soon. So that's obviously going to affect gold as well. So the news is coming in about 2 hours. It can literally spike price in either direction. So I still have a buy bias for gold, and I'll have a buy bias until price breaks below the pivot. So if price goes below the pivots right here, then I'd probably take a sell and then ride it to the next zone over here. However, if price rejects off this point and corrects back to the upward trend, then I anticipate it to shoot up to here, which would be about 2014, or less than that actually. So 2013. But I mean, we'll have to wait and see, because the Aussie news will probably affect it pretty heavily. Let's see, Miles. Yeah, sure, no problem. Anonymous. I'll call you by your name, but it says anonymous attendee. But yeah, no problem. Let me see. No, not yet, Miles. I'll take a look at that right now too. So let me see what Javon said. Javon said, so I discovered this candle training strategy, and it's a bit imperfect. It's basically scalping on the daily chart. Basically, you sell on a sell candle and wait for price to go down to make a profit, vice versa. I used it on US 30 and made about 300 in an hour. I was wondering if you had any tips on how to perfect that strategy. The strategy is from Jeremy Ka on YouTube. Let's see, I'm trying to figure out what she meant by that, Javon. So Javon said, basically you sell on a sell candle. No, it's all right, bro. Your typos are all right. I'm just trying to understand what you were saying. So let me just go to US 30 real quick. I mean, if you're trading US 30 on the daily chart, that's a lot of risk, because a daily candle is it's pretty big. I mean, you'd have to, you know, that's a big move. So basically, let's see. So Javon said, basically you sell on a sell candle and wait for the price to go down to make. So basically what you're doing is you're waiting for it to close as a sell candle, and you just take like any random sell. So let's see. So if you took a sell right here, I guess you could have wrote it down for about 100 pips, I guess. Or this would be considered 1300, because this is currency.com. So let me go over to US 30. So yeah, if you were to take this trade, but see, this is the problem. If you just take a random sell, like, you know, off the close, you'd be in so much drawdown before you even get in profit. Oh shit, sorry. It would be it'd be hard to tell, because the thing is, like, what if you get in the trade, like, what if the trade goes into so much drawdown before it goes in profit? So if you're in drawdown like 2,600 pips. This is like a huge risk, you know, to make just this much. Or in some cases, it doesn't even go down. So let's see. Because the thing is, that strategy is kind of based on luck, because it doesn't always go in profit. So let's see. Like, you literally would have to be on point with, because your stop loss would probably be the body of the candle, right? So if you were to take this trade right here, and you entered right there, you'd go into drawdown like 10,000 pips, which is, that's a lot of money. That's like 10,000 bucks. Or even if you're trading like the very smallest, that would be like $1,000 risk, because it's hard to backtest it when we don't have, okay, so let me just do this. So let's go to, we could go to like the 1 minute candle. So if we go to like midnight where the candle closes, this is just going to give us a better picture of, how much drawdown you go into when you enter that trade. So let's see. So actually it's going to be hard because we need to get that entry from the daily. This is something that you can only backtest like real time, because the problem with this is that there's no guarantee that it's going to go in that direction at that point. So it looks like you'd probably scalp it every, yeah, I mean, it's going to be hard for us to backtest because there's no way to determine whether it went to drawdown right after or if it went into profit, because the daily candle doesn't show, time in between. And there's no way to really tell if that was a full green candle or if it was a full red candle. Let me see if there's a recent one here. Okay, so like, let's go to, all right, so the 31st was a red candle, right? So let's go to midnight of September 1st, yesterday. This is something that I used to use before too. I never use it on US 30, but I used to use it on Forex pairs when the session would open, which did work most of the time, but it was still like super risky because you never knew where to like put your stop loss or like when to get out of a trade. Okay, so like it was a sell. Okay, so the entry would have been right here. So right as the candle closed right here, you were taking a sell. So it looks like you would have went into profit, slightly about 500 pips, but you would have went into drawdown same amount, 500 pips, and then you could have wrote it down. But the problem with this is like you wouldn't know where to move your stop loss, because obviously you might get out of the trade a little too early, unless you have like a sweet spot. I don't know if you have a sweet spot for when to exit a trade. But I just find this strategy to be really risky because I've used it before for Forex. Maybe it works differently on US 30 because there's higher volatility there. But yeah, going back to your question. So one way to make that, to increase your odds when trading that strategy, I would probably only take that in the direction of the trend. So I think you have the indicators, right, Javon? So I would use the K2 pivots indicator. And then, so if you were to get a buy, then I would use that strategy and only take buys because price is obviously trending up. If price was below, then it would work nice. So like right here, price was below, you could take a sell, and then you can ride that down. Same situation right here. But just like I mentioned, like it's kind of, even if you were to use that confirmation, if you took this buy right here, I mean, you could have locked in a decent amount of profit, but you'd be in drawdown like 6,000 pips. Like I wouldn't risk making a couple hundred pips to be in drawdown 6,000 pips. But like I said, I'm not familiar with that strategy, that specific strategy you're talking about. I use something similar. So I had, I had a breaking point where I had my stop loss. But I'm sure you have some sort of strategy to that. So yeah, probably, I think the main thing that you can add to it is to just trade in the, direction of the trend. So obviously if you're taking a sell, you can take a sell if it's trending down. Vice versa, if it's trending up, you can only take buys. Because the last thing you want to do is take something like this where you take a sell, but price is trending up, and then you end up going, so your profit potential here is like about 1,000 pips, but then you go into draw down like 5,000, 6,000 pips. But yeah, I'm sure you have something down where you can go ahead and set your stop loss and your TP. But yeah, I'm not familiar with that strategy, so I can't really give you, any exact tips on, how to make that better. Like something like here. So like you mentioned, if you got a buy candle and then you enter on the close of that, you could have entered a buy right here and then you would have went into drawdown, like 3,000 pips right here, which is super risky because the thing is it did recover, but it took like 6 days for it to recover. So you'd be in like super heavy drawdown before you got back into profit over here. But I mean, if it works for you, it works for you. And, there's no wrong way to trade. Obviously, there's a ton of strategies out there. And if it fits your trading style, then definitely. But yeah, just one addition to that would be to trade in the direction of the trend to better your odds. Javon said it's scalping on the one candle, though. I thought you meant it was on, because if you're trading on the daily, that would be considered swing, like either swing trading or intraday at the very least. I'd have to look into that strategy, but I'm not familiar with it. But if you're scalping on it, then that like brings a whole nother aspect to it. Because if you're scalping on the daily, that's like, I don't know how you'd consider that scalping, unless that's just how you would make your entry. Like if you have a bias for that day, if you want to take a buy bias, then yeah, that makes sense. But I mean, if I was to take this strategy, I would just write it and then just lock in some profit and then call it a day. I don't know if I would scalp the entire candle, because the thing is, so if you're scalping that and you're way up here and then it pulls down, it's just a bit risky. I mean, if you know how to apply it, then yeah, then if it works, then it's good. But I would also only trade in the direction of the trend, just to be safe. But yeah, Javon, I'll have to look into that strategy and see how that works. I mean, it looks like it's kind of similar to how we trade, because we trade in the direction of the trend, but our catalyst is going to be, the momentum candles, because obviously we only want to trade in the direction of momentum. We don't want to trade against it. But I'll take a look at that, like probably later today, and I'll see, how I can make that better. Anonymous Tenny's asking best time frame for scalping. So me personally, I like to trade on the 10-minute, but there's all right, cool, Jamal. I'll save that for later today, and I'll take a look at that. All right, let me see what we got here. All right, so I'll just leave it open right there. Oh, wait, what is this? I still have this open. Okay. There's no questions. I'll just close this. But yeah, let me go back to charts over here. But yeah, anonymous attendee. So basically, the way that I like to scalp is on the 10-minute. And I like it because it gives you a good amount of entries, but they're also still a little accurate. So if you go on anything lower than that, like the 5, you'll get a ton of entries right here. Like you could, apply the pivot strategy and take all of these right here, which, obviously they look like they'd be nice winners. So let's see. Yeah, that probably would have been about, 1, 2, 3, maybe another one right there, 4, 5, 6. So it looks like it's good on the 5, but if you go farther back, the problem with the 5 is that there's a lot of noise on this chart, on this specific time frame. Like right here, if you took this sell right here, this probably would have been a loss. And same with right here. There's a ton of noise. Like you'll catch these sells right here, but then price will come down and then it'll spike up and stop you out. Depending on where your stop loss is. That doesn't mean that your stop loss is going to be right there, but if it was, then you probably would have gone stopped out within these these specific trades. But if you go on the 10-minute, like I mentioned earlier, you'll get to catch bigger moves. So these are like 500, 800 pip moves. But if you go on the 10-minute, you can scalp way bigger moves on here. So like right here would be a buy. And then again right here. And then like I mentioned earlier, there was like let me see, there was a sell right here, and this probably would have been a loss. Where was it? Yeah, like this one right here, this might have been a loss, but if you look on the 10-minute, it looks like it would have been a win. So you would have avoided that loss there. And right here as well. So right here, here's another sell, and then you would have hit TP right there before you would have hit stop loss. So, I mean, there's no specific perfect time frame to scalp on. It just really depends on you. So if you want to take a bunch of trades, and if you're able to stare at the chart like, you know, all day, then obviously the 5-minute, you'll have more entries and you can make a lot more money trading on the 5-minute. But if you want to stare on the chart like literally all day, you can go on the 10-minute, or even if you want to go on a higher time frame, the 15-minute. And they work decent on pretty much all time frames. It just really depends on you. But me personally, I like to trade on the 10-minute. I know a lot of people don't have, you know, the paid account for a trading view. So if you don't, then you don't have access to the 10-minute chart. But if you do, I find it very beneficial. And this is the same time frame that we used for the daily US 30 entries as well. Yeah, let me keep going. All right, Miles, I'm gonna check out US 30. Sorry, I had you waiting for a while. Let me get 1 second, guys. I'll be right back. All right, guys, I'm back. Let's go to US 30 for Miles. So I think Miles is still here, right? Yeah, Miles is still here. So let me go to the 4-hour time frame. Look at UJ. I was actually looking at UJ to enter today as well. I think there was like too many zones that were nearby. So let me just take everything off so it's a naked chart. And then I'll plot my zones first. Cabbage Kid said, can you show how to make the zone with the K2 SR indicator at the end of call? Yeah, Cabbage. So I'll just go over right now because I'm gonna do it anyways. So basically the way that I draw my zones is I'll start off with a naked chart like this, and then I'll add the K2 SR indicator. And then, you know, once I have this on there, then I will draw my zones over it. So you can see the K2 SR zone down here. I just draw my own zone manually down there. And then got another one right here. And then we got a couple over here that are kind of overlapping. So I'll probably just connect. Let's see. I'll do this one down here, and then I'll connect these up here. And you guys can draw these, you know, however you like. There's no one way of drawing these, but you know, me personally, I like to keep some space between the zones, just so that I know where. I like to give some cushion where I avoid trading from, because obviously you don't want to trade within the zones, because when price gets within the zones, it either rejects on them or it consolidates. So you can see right here, price. I'll delete this right here. Yeah, once I draw my zones, I'll hide the K2SRs, and then there you go. You get some nice zones on the chart for you. But you can see right here, generally when price gets into a zone and it gets stuck inside, it just consolidates sideways. So I don't like to trade when price gets near a zone, because once price gets near a zone, it could do it can do one of three things. Like price came down from this zone, and then it can either reject off it and correct back upwards, or it could break below it to the next zone, or it can move sideways. So generally, you don't want to be stuck in a trade like this. It's better off for you to just wait for it to break outside the zone, like it did over here, and then you enter a sell to the next zone. Or if it broke down this big zone right here, where it's an open space, you could pretty much ride it, all the way down here. But yeah, that's pretty much how I draw my zones. It's real simple. I just use the K2SR, and then I draw my own zones manually over it. And then there you go, you get some clean zones on the chart. And like I mentioned, these are perfect. I always start off with the zones because this will give you the framework to see how price has been moving, for the past X amount of time. So I have, since I'm trading on the 4-hour, I can see how this pair has been moving since June. So from June, you can see that it trended for a little bit, then it went sideways for about a week, then it broke down, went sideways again for another week, then it went down heavily for like a whole week, then it went up for a whole week. And then you can just see how price is moving. So you can see right here, last week, it went down pretty heavily, and then it looks like it's correcting back up, right? So as it rejected off this point, odds are it's probably gonna push down and retest the zone. So it's pretty much in consolidation right here. So it went from up here from down here to up here, from up here to possibly down here, until it either breaks below the zone or breaks above it to test the next zone. But yeah, Mouse, let me go back and analyze this for you. So once I have the zones plotted on the chart, the next thing I do is I turn on the K2 pivots. And the reason I do that is to identify, see, like I mentioned earlier, you can see how price has been moving, but if you turn on the pivots, it gives you even extra confirmation. So the way that I use the pivots is if price is below the pivots are angled in the same direction and they're spread out, that's going to give me confirmation of a downtrend. If price is above the pivots and vice versa, the pivots are angling upwards and they're spread out like they are right here, this is going to give me confirmation that price is trending upwards. So obviously you want to trade in the direction of the trend. So if price is trending down, you only take sells. If price is trending up, you only take buys. Same situation right here. Price is consolidating, you just don't trade it. Price breaks below and it's trending down, you take a sell. But yeah, just looking at price right now, I already had the bias that price was going to reject off this point and come down. And this gives me extra confirmation right here because price is below the pivots or it's attempting to break below the pivots. So if this closes below it right here, then odds are it's going to continue down. And then if the trend down is really strong, like it is right here, see price broke the zone. See, technically this zone probably would have been over here. So see, once price breaks the zone, it will probably continue downward. So as this comes down, if this breaks below, then odds are it's probably going to come down further to this next zone. And this gives you a whole lot of room to trade in. So it gives you about 100 pips for you to, play around in right here to, either scalp some sells or take the entire move. But let's see. So once I have this, so for one, I like to identify where the rejection points are, where the K2SR zones are. On top of that, I want to identify the direction of the trend. Once I have all those two together and I identify that, price rejected off this zone, price is in a downtrend, sort of, it's not a full downtrend, but looks like if it closes below, it'll confirm a downtrend. On top of that, I turn on the K2SR indicator. So once I have the K2SR indicator, you can see right here that there's no sell momentum, right? Because right here we have a buy momentum and you can see price came up and then rejected off this zone. So the next zone that it needs to test is going to be right here. But we don't have a sell signal yet. So once we get a sell signal, then it'll give me confirmation that, price is going to continue down. Right now, there's no sell signal. So technically, it's still in an upwards momentum right now. So until we get a sell signal, this is what I've been waiting for like the past couple of days. So you can see right here, on the 30th, on Sunday, when the market reopened, price just shot up a little bit. And then I was just waiting for a sell signal before I take a sell because I don't want to just enter this trade for a sell, even though I think it's going to come down. And then it ends up shooting up because momentum is still swinging upwards, right? So me personally, I would probably wait for a sell signal to appear. So once we do get a sell signal here, then I can ride that to either this zone right here, or I can wait for it to break below. So you can see right here, price tried to break below, but it failed. But like I mentioned, see how we got a sell signal here? If we get a sell signal right here, it's probably gonna push down and test the zone like it did right here, right? Which is about, so you could have locked in like 50 pips right there, or even more if you wrote all the way down, 65 pips. Same situation right here. If I get a sell signal, I'm going to anticipate that price is going to push down to retest the zone because it's attempting to break it. So it's tested it 1, 2, 3, 4. This will probably be the 5th time. So on that 5th try, it might be strong enough to push price below. So I would have a sell bias on this, but like I mentioned, you know, I'd have to wait for an actual sell signal to give me that confirmation. Because the last thing you want to do is enter a sell and then price shoots upwards. Here, let me see. Wait, Cabbage Kid. I don't know. Cabbage Kid said that that was me, but I'm not sure what he was what he meant by that. But yeah, Miles, you know, right now we don't have a sell signal. So once we do get a sell signal, then, you know, I'd be comfortable with taking a sell. But right now, since we don't have a sell signal, price could still shoot on upwards, and it might shoot on up and then retest it a second time. So until I have that confirmation, I wouldn't enter this trade because it could literally go either direction. It could either come back up to retest the zone or even break above it, or once we get a sell signal like we did right here, it could probably come down and test the zone right here. Yeah, it's pretty much up in the air for right now. Let me keep looking for the next question. So Brian said, can you go over settings for the K2 pivots? So Brian, I don't touch any of the settings on the K2 pivots. They're set at default at 8, 13, 34, and 55. You know, if you mess with them, you can just go and hit reset settings, and then it'll just put them back to how they were. I know there's a few other people in the group that change the settings because they want to put their last pivot a little farther out. You can ask in the group for that. I don't remember what they were set to. I think CT set them to a specific number that provided for a farther push out. So, you know, generally right here, you can see once price pushes up, the pivots are still kind of close. I think with CT, he moved them to like 76 or something. So in that situation, it pushed it back a little further, just so you get a little more cushion before price crosses, you know, that specific pivot. But me personally, I just leave them at the default. There's like no, I don't see a huge difference. And I've been using these for a while, so these work perfectly fine for me. So that's why I don't really change them. But you can change them if you want them to go farther. It's just, I don't recommend it because I've been using the same settings for a long time and they work perfectly for me. So I don't think there's real necessity for you to change them. Let's see. All right, anonymous attendee said, oh, Cabbage Kid said, I'm sorry, I was asking about the second SR indicator. Oh yeah, no, got you, Cabbage. So let me go over that real quick. So, all right, Miles, thanks, Shawn. Yeah, I still think it has room to go a little more upwards before the sell. Yeah, I agree. So, you know, like I mentioned, it could probably push up and then retest it a second time. It looks like it tested it 1, 2, 3. And then, you know, if it's a quadruple top, then I'd give it more momentum for it to push down. But yeah, I would probably just wait for it to give off a sell signal before entering that trade. Khalil said, when you get a sell signal, do you enter off on that candle or the next? So you'd have to wait for it to close because even if we got a sell signal during this active candle, it wouldn't stick until that candle closes. So it could appear and then it could disappear because the 4-hour candle is a pretty long time period. So within that time frame, you know, price can move back and forth. So I would wait for it to close like it did right here. So once this closed, then you can enter on the close of it. Or same situation right here. Once it closed, you can enter on the close of that. And if you know what time the 4-hour candle closes, or depending on whatever time frame you're trading on, You know, on the 4 hour, it closes at 6 p.m., 10 p.m., 2 a.m., 6 a.m., and 10 a.m. So I know exactly, you know, when to look for the trade. So basically, so me, for the most part, since I trade on the 4 hour time frame, I'm not staring at the chart all day. The only time I'm looking at the chart is if someone's asking a question or if it's getting closer to the candle close, because I only trade on the 4 hour. So instead of me looking at the chart all day, I'm just looking at it at 6 p.m. and then again at 10 p.m. and then sometimes at 2 a.m. if I'm awake. And then again at 6 a.m. and then 10 a.m. So I'm not like staring at the chart all the time. I'm just waiting for it to get near closing time for that specific candle, so that once it closes, then I know I can enter that trade or not. But if you're trading on the 30-minute, then, you know, obviously you can check every 30 minutes, or you can check, you know, if you're trading on the 1 hour at the end of every hour. It just really depends on what time frame you want to trade on. But you would have to wait for it to close before you make an entry for it to be confirmed. All right, let me see. I'm going to look at Cabbage Kid's question about the other SR indicator. So let me just clear everything up again. And then I will just take everything off the chart. So this is the original K2SR indicator. So the one that we were using was version 2, which creates zones. But this is the original one. So the original one basically plots the strongest support resistance on the chart for you. And it still works pretty nice if you just want to have, you know, one set of support resistance. But, you know, overall, you kind of want to know where all of the support resistances are on the chart for you. So if I go and replay this, you can see right here that this is a strong support resistance. The reason it's strong is because this area has been tested so many times at that same exact price point. So you can see it tested it once, twice, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. 20 and above, you know, touches on that same exact price point. So as price moves along, you can see that the resistance right here keeps moving, right? So let me back it up a little bit. So you see that the resistance is right there. Keep an eye on it, and you can see that it moves as price moves along with it. So instead of having to, you know, draw support resistance on the chart, you have it drawn for you. So this saves a lot of time because a lot of people are always moving their support resistance. So if you have this, and then if it moves too far up, this is because price is in a new area that hasn't tested before. And odds are if it overextends like that, it's going to come back down. So you can see right there, price came back down or tested the same. Well, it turned into a support because price broke above it. But once it broke below, it came down pretty hard. And then as you let it run, you can see that the resistance and the support just automatically adjust for you. So you don't have to do any work. So you can apply your strategy and use the support resistance as, you know, extra confirmation. Because obviously you don't want to trade where price is near resistance. So if price is getting near resistance right here, you don't want to take a buy because it's going to reject right off it like it did right here. And then obviously once price comes down, you don't want to take a sell right here because price rejects right off it like it did right here. So as you can see right there, I mean, you can develop your own strategy just using the support resistance. You can literally just scalp, you know, every time it rejects off a K2SR, which is another strategy that a lot of people like to use. But yeah, so the good thing about it being laggy, so it doesn't move too fast because it doesn't give you any false support resistance. It waits for price to actually establish down there before it moves. So you can see right here, see it lags a little bit. So sometimes price will pass the resistance or the support and it won't adjust yet because it wants to confirm 100% that price, you know, that's the actual support. It's not just going to switch there because it thinks it's the support. It's going to move when it knows it's the support. So as you can see right here, it just automatically adjusts for you. So another thing you can do with this is you can use the K2 momentum indicator and you could literally just trade between the zones. So you get a sell signal right there. You could have taken a sell, you get a buy. And there's a ton of ways to apply it. You know, the thing that I like to remind people is that the K2 indicators are for your free use. Like literally, if you have a strategy, you can add the K2SR indicators. I mean, not the K2SR. You can add any K2 indicator to improve your strategy. So the thing is, if you have a strategy and you have a problem, like say you're taking a strategy like Javon was talking about earlier, where he takes, you know, he scalps within a specific sell or a specific buy. You know, if you have issues and you keep getting stopped out because price keeps rejecting on you, you know, maybe you just need to understand where the trend is. And if you need to do that, you can just use the K2 pivots, or you can use the K2 trend meter down here. Say if you have another strategy where you trade in the direction of the trend, but you never know where to enter, right? If you don't know where to enter, you can use the K2 momentum indicator, and then you could identify like, oh, this is a nice sell right here because of a momentum swing downwards, but you already know the price is trending down. It just simplifies pretty much everything for you. You know, if there's an issue with your strategy, you can use any of the K2S, like the K2 indicators, and it'll fix your problem. So that's just a reminder, guys. Like, I have the K2 strategies for you guys. Like, if you are, you know, you're a member and then you go on the course, I have my strategies here, but you don't have to use my strategies. A lot of people just use the indicators for their own use. They're not meant to be used for that specific strategy only. You can literally use it for anything. It just really depends on what you want to use it for. But okay, so let me keep going over the question. So the next question is from Sierra. She's asking, can you check NAS 100 for me? I'm not seeing SR for the zone that it's in. So let's see. Sierra, what time frame are you looking at so I can analyze it from how you're analyzing it? So I got the NAS 100 right here, because generally I analyze it on the 4-hour, but I know, you know, other people analyze it on different time frames. So if you have a specific, okay, 15-minute. So let's see. Yeah, so see, the problem with the SR is if price reaches a new price point, like up here, where it hasn't reached before in the past, it's not going to create a new zone. So let me, which happens sometimes, because sometimes price reaches new records, and, you know, in that situation, there will be no zone. So like, yeah, you're looking for a zone up here, right? So here's the 15-minute, let's go on the 30-minute, no zones up there. 45-minute, nothing there. 1 hour, nothing there. It looks like it reached a new high that it hasn't reached in ever. 4-hour, 8-hour. Yeah, so it looks like it's at a brand new high. Because look, we're on the monthly. Oh wow, how did this even happen? So yeah, see, this is why there's no zones up there, because price has never reached that point before. This is a brand new high for the Nasdaq. You know, the zone only gets created if that area has been tested at that same exact price point in the past. So you can see right here, price tested this area, you know, twice right here. But yeah, you know, just looking at the Nasdaq, there's no signs of it stopping, even on the daily right here. So what I see happening here is if price comes down right here and retraces, then it'll create a zone somewhere around here. But since price hasn't came down yet, it hasn't created a zone. See, the only reason it created a zone right here is because price it went sideways and then it came back down. So price shot up, then it came sideways and then it came down. So when that happened, it created a zone right here. The problem with Nasdaq right now is that there's literally no zone. So there's nothing to base data off. The thing with the K2SR is that it creates these zones based on previous data. So if we go on the monthly, yeah, you know, we go back to April 2003. It's never been at this high before. So that, you know, that's the main reason why. But yeah, Sierra said let it fly. Yeah, literally, you could probably take a buy and just hang on to it. You know, although I don't recommend it, it doesn't show any signs of stopping, which is, it's kind of scary, because if it pushes up this high, you know that this, like, with COVID going on and with everything going on in the world, you know, the stock market's not supposed to be moving like this. This is getting moved because the stock market keeps getting bailed out. But you know what happened like years ago when this happened, when they kept pumping the stock market, it's just prepping for a huge dump. So let's go on the monthly over here. So you can see right here. All right, so this is the crash in 2008, right? So price was just getting pushed up like crazy, even though, you know, it wasn't supposed to be going up like that. And then what happened here is that it ended up dropping heavily right here, like 12,000 pips. So same situation right here. I mean, this was in December 2018. See, price was getting, you know, they were just pumping it up, and then it came for a huge drop. Same situation right here when COVID happened. it was pushing up, and then it had a huge drop right here for like 30,000 pips. Like, this is freaking insane. Um, Same situation right here. Like, this is extremely overextended. This is the monthly chart, guys. This isn't even the daily. This is monthly. So this is September, August, July, June, May, up until March. It's just been in a straight push upwards. And this is because tech companies are doing well. But the thing is, they can't do well forever, you know? Something's going to happen where it's going to push it down. It's impossible for a company to just have, 100% gains every single day. I mean, like, just looking at Apple, looking at Tesla, like, it's crazy how they just keep pushing up and there's no signs of stopping. That's why there's a ton of people trying to short sell it, but they just keep losing because they're trying to cash that top. If we compare this to like the US 30, you can see that there's a huge discrepancy here. So if we go back to, let me see if I could pull up the chart for the monthly. Yeah, I don't know why the data doesn't go farther than this for US 30. Let me see if I could, I think it's just this specific. Oh, it's the data. Okay, so let me just change to, okay, so we have more data here. So, going back over here, this is the same situation, a huge stock market crash right here, 2000, up from 2003 to 2007. It was just pushing up like crazy, and it shouldn't have been pushing up. And then we hit the recession right here. And then from like, it wasn't even 2008 yet. It was like late 2007. It came down super heavy, and then it pushed up, and then same situation right here. See, this is like the biggest drop since the recession, and it happened like in 2 months, from February to March, or like, yeah, from January to March, it just dropped like crazy. Worse than the depression right here. So same situation right here. It's pushing up when it probably shouldn't be pushing up this high. But, we'll see how that happens. Angel said everyone trading off their phones now. Yeah, I know. See, that's the thing. That's how the market's gonna get super manipulated, because there's a whole bunch of people that are trading off their phones and don't know what they're doing. So the institutions and the banks are pretty much pumping it up. So they just keep buying and buying and buying. And then once there's enough people in the market and sentiment's so high, what's gonna happen? They're gonna dump it. And then everyone who put money into the stock market is going to lose it, and then the rich people just keep staying rich because they take everyone's money. So this is why I don't like to swing trade, not just indices, but just swing trading in general, because it's just dangerous. You never know when it's going to drop. But yeah, good luck to whoever's pretty much holding these. I don't think we've hit the bottom yet, personally. So I mean, we'll see how that goes. But me personally, I don't want to risk it. Yeah, okay, so let me Sierra said I'm afraid to hold. It's fine to hold Sierra, but as long as you have a stop loss. So that's a problem with a lot of people. They don't put a stop loss on. As long as you have a stop loss, and I mean, I'm pretty sure you're trading on Hugo's way, so that's probably not the best broker. So they're probably not gonna what's the word? They're not gonna honor your stop loss. Oh, you're using CoinEx. Okay, I mean, same difference. But yeah, if you're using an unregulated broker, they're probably not gonna honor your your stop loss if slippage goes through. So in that case, I would just make sure to have X amount of money in your account. That's why I always tell people, like, when I trade on Hugo's Way, I don't recommend it to anyone, but I do use it myself. But I do keep a small amount. So I only keep a couple thousand in there, because if I lose all that money, it's fine, no biggie. I just move on to the, it's a loss for me because I took that risk. But some people, they keep a lot of money in there. They keep like tens of thousands of dollars in their unregulated account. And so say if your stop loss is right there, right? And then price moves so fast, like it spikes down so fast and it passes your stop loss because it doesn't close you out, you're going to be on the hook for this huge loss right here. So if you only have a couple thousand in your account, then your couple thousand goes down the drain. But if you have like tens of thousands of dollars in your account, you're gonna have to owe this amount left. So that's why I always recommend, if you're gonna be taking risky trades like that on if you're gonna be taking risky trades on an unregulated broker, keep your account size small, because if you get banned from this account, like say if you owe the money, you just make a new account, no biggie. But if you have money in the account, they're not going to let you withdraw because you're in a huge negative. I think we have something here. Let's see. There was another. Of caught. Let's see. Let's see if I could find that picture from a long time ago. Okay, so like this is the same situation right here. See this guy? He's not even in K2. It's just a picture that got spread around. So this is where slippage happened with him, where he had a 25 pip stop loss, but then they didn't honor his stop loss because it went through slippage, and he ended up going to the negative 20, like 21,000. Like thankfully his balance was only 4,000, so he was able to basically take that loss, but he didn't owe the whole 21,000. If you had 21,000 in your account, they're not going to let you withdraw any money because you're in the negative. You pretty much got to pay all that off. But if you have a small amount in your account, you can literally just take that loss and then make a new account. And that's why it's fine if you want to use an unregulated broker. Just don't keep too much money in the account. Angel said, how can it skip your stop loss though? So this is what happens. So say if there's a huge sell-off, right, Angel, price will shoot right through it. And the thing is, price goes right past it. And then, so like, how there's gaps in the market? Like, so if price is right here and there's a huge sell-off, so price ends up going from 12,400 to 11,500. But your stop loss was right here. It never got filled. So that's an issue because price is way down here, but your stop loss is way up here, and it's called slippage. So if you want to look it up, just Google slippage. Let me see if I can find it right here. Let's see. Slippage trading. I'll see. Yeah. Okay. Here we go. Let me see if I can find a better explanation. So yeah, basically slippage, refers to the difference between the expected price of a trade and the price where the trade is executed. So slippage can occur at any time, but most prevalent during periods of high volatility when market orders are used. So pretty much that's what I was just describing. So pretty much when there's too much volatility in the market where price is spiking, and it happens often. Like if you're trading NFP, you could get caught in slippage, or if you're trading news events, because the volatility is so high that it passes right through your stop loss and doesn't trigger it. And it's actually pretty common. And the problem with using an unregulated broker is that they're unregulated for a reason. They don't need to follow rules, so they can literally just tell you, oh well, sorry, but your stop loss didn't trigger, so pay us the money that you owe. But if you're using a regulated broker, you can make a complaint against that broker. So if they don't want to pay you back for that slippage, then they get in trouble. So obviously they'll just refund you your money. And that's why I never recommend any unregulated brokers, even though I use them myself. I just don't recommend them to, obviously K2 members, because I don't want it to happen to you guys. But it's pretty common. So let's say, I think NFP is next week. If you want to see it happen, you could probably try trading NFP. So let's see. NFP is actually NFP is this Friday. So if you want to try it, like open a demo account and trade during NFP, because price is going to spike on this day. This is why I don't trade on NFP, because I don't want that to happen to my own account. So if you want to see it, actually happen, you can probably trade something crazy. Trade something like gold. Trade gold during NFP. Just put a random order in, and then see how price spikes. So when it spikes, see if it fills your stop loss. It might not fill it, or it might fill it really late. So, if you just want to experiment, that'd be one way to check it out and see how it works. But yeah, you just gotta be careful. That's why I never trade news and I never trade NFP. That's why I always give I give the reminder to everyone to close your trades or move your stop loss and profit. So if that happens, you can get stopped out in profit and you won't get caught in any slippage. But let's see. So one more question from Bims. Bims asking, is GJ shooting upwards or drop to down? So let's go to GJ real quick. I'm gonna do the same thing I did with every other pair. I'm gonna go and draw the SRs. So let's see, we got SR right here. We got an SR right here. Then we probably got like a big one right here. So I'll just draw that. You know, obviously we have more zones down here, but it's pretty irrelevant because we're trading up here. You know, on top of that, I want to get the resistance as well. So let's go on the higher time frames. All right, so resistance isn't until way up here. Go back to that daily. And then there's another zone right here. All right, cool. So it looks like it's pretty bullish. So, you know, like I mentioned, first I like to identify the zones. You know, once I have the zones drawn right there, then I turn on the K2 pivots to identify the direction of the trend. So as you can see right here, BIMs, it's obviously in a very strong uptrend. So it's been trending up since June 19. So it's been trending up for a couple months now. So once I have this set up, you know, obviously I know where price is likely to reject from. I know the direction of the trend. Now we'll turn on the momentum indicator. So you can see right here that the momentum started from way down here. So since then, it's pushed up about 150, 170, maybe 180 pips. Yeah, it's pushed up a lot, right? So generally when it pushes up that high, it has to retrace, which is what happened right here. So it pushed up, retraced down from here. You know, what might happen next is it might reject off this K2 pivot and continue upwards. Or it might continue down, test this K2SR zone, and then shoot upwards. So just looking at it from a bird's eye view, it's obviously in a strong uptrend. So I do have a buy bias here, but me personally, I would probably wait for extra confirmation. Like I would wait for it to come down, maybe test this zone, and then if I get a buy signal, then I would take it. So you can see right here, price is trending up, but every time we got a sell signal, it was just a small retracement, right? Or some sort of pullback. So price came up, pullback right here, retracement, shoot back up, continued up. Right here, we got a sell, retracement, came back up, retracement, came back up, retracement right here, and then it shot back up. Same situation right here. I'd be waiting for a sell signal like we did right here, but since it's in the direction of the trend, it would be, you know, some sort of retracement or pullback. So once we get that pullback, then I would take the next buy signal like this right here, and then I would write it up. So yeah, if you're in this trade, then obviously if you're in a buy, it looks good. But like I mentioned, you know, it's probably going to retrace down a little bit before it shoots on up. But once I get a buy signal, I would take a buy. Like right here, if we took this buy, it's like 150 pips there. Again, right here, another 150 pips right there. Again, right here, another 150 pips. You know, it's in such a strong uptrend that I would only take buys. But right now it's retracing. So I would wait for, you know, some sort of confirmation before we take this trade, or if we decide to take this trade. But yeah, that's GJ. Let's see. All right, who's asking about NJ? So I think that's the NJ that we're still in, right? Pull up NJ real quick. Same situation. It looks like all the JPY pairs are actually really bullish. So that's a good thing for us because we're in a buy. You know, obviously EJ. I think this was ours from earlier, but let me go back to NJ. So I'll look it up. So, you know, same situation here. I do the same thing for every single trade, guys. So, you know, it's the same process. It's super simple. You know, once you get it down, it'll be extremely easy for you to analyze trades. Like a lot of people may overcomplicate it and they like to add so many things to the chart, but literally all you need to do is identify rejection points, the trend, and momentum. That's all you really need. Once you have those three, you know, you can literally analyze anything. You can analyze Forex, you can analyze US 30, indices, commodities like gold. It really doesn't matter because the market pretty much moves the same overall. You know, obviously Forex is going to range a lot, so you'll get a lot of zones. And obviously, you know, indices are going to move directional. So the zones are going to be spread out. So those are the only main differences are going to be, you know, areas of rejection because, you know, indices move directional while Forex moves sideways for the most part. So that's the only difference. But, you know, everything else pretty much aligns. Like, you know, everything trends at some point. Everything has momentum at some point. So if you could tie the momentum with, so K2 pivots, if you could tie momentum up with, tie the trend up with momentum, with the K2 momentum indicator, you could literally take like, you know, a ton of trades in that direction. So, you know, if you were to take this trade here, oh, whoops, wrong indicator. So like if you wanted to keep it really basic, you know, if price is trending up, you have the momentum buy right there, you just take a buy. Same situation here. If, you know, price is trending down and you have a sell signal, you take a sell using the pivot strategy. And then vice versa moving forward. But yeah, let me just go back and do this from scratch like I mentioned. So basically, first thing first, I determine where the rejection points are. So here's NJ. Let me draw my zones. So we got a lower zone down here. We got a higher zone right here. Got another zone right here. I mean, these zones are kind of unnecessary because they're so low. Like, you know, it's so far from price that we're not even gonna really use them at all. What we really want to get are the two closest zones. You want to get the lower zone, so you know where price rejects from the lower end, and then you want the zone from the upper end. So right here, there's no upper zone on the 4 hour. So we'll go to the 8 hour. And there we go, perfect. So we already got the setup right here, right? All right, so same situation, go back to the 4 hour to determine entry. I think this was our entry right here, right, bro? So our entry was something like this right here. Let me see what it was. Jpy, 48 pips. All right, cool. So it looks like it's pushing back into profit. So it actually looks real good, bro. So if you're looking at NJ right now, it's actually it looks like it's about to hit TP1 right now for 12 pips. So I know we were in the hole for a bit. That was because of the news earlier. Obviously, you know, 10 a.m. that's when the news hit this morning. It was because the US dollar was so strong. So when it's strong, actually, no, this is the yen. So it was the US news, but the US news affects all pairs. So that's why the yen went down, because the US news, it kind of directly correlated with it, because, you know, the Japanese yen is a safe haven currency compared to the US dollar. So that's why it spiked down. But then now it's correcting back upwards, and it looks like it's about to hit our TP. So turning on the pivots right here and turning on the K2 momentum indicator. You can see right here that we got a buy signal way down here. The momentum is just way too strong. It's pushing up. And that's why we took this entry right here, because price broke the zone right here and then it closed above it. So it provided for a K2SR zone entry. So once we got that zone entry, I called this buy right here. But as you can see, as price came down, it rejected off the K2 pivot right here. And this is a nice wick right here. So it's a really nice wick. And this looks like a strong bullish candle. So if this happens, it's just going to shoot upwards. It's going to give that confirmation of the rejection. Rejection, bullish confirmation, shot on upwards. So it looks good, bro. If you're still in this NJ, which you should be because it didn't hit TP yet, it looks pretty good. And I think it's going to shoot on up to TP1 at the very least, you know, probably within the next 30 minutes to an hour. So this looks good for right now. This is the next question. Next question is from Tony. All right, so Tony said to check out DAX. So let me pull up the DAX real quick. The DAX 30. There we go. All right, so it looks like I already have the zones lined up over here. I'll start from scratch again so you guys can see how I do it. You guys can see how easy it is. It's super simple. I do the same thing for every single pair. So delete the zones, draw the new zones right here. Looks like we got one right there. right there. One right there. Small one right here. I'll draw zones all around just to have a good understanding where price is likely to reject from. You know, generally you don't need to have zones all the way around because obviously you're not trading down here, but I'll just draw these zones just for, you know, visualization purposes. So right there, we got all the zones. Hide the K2 SR, open the K2 pivots. So the pivots are, you can see generally when it's above, it's trending up. When it's below, it's trending down. But you can see currently right here, the pivots are just crossing over. So with the DAX, I would wait here. Let me turn on the momentum indicator. Okay, perfect. So this is exactly what I was looking for. I was waiting for a buy signal to give confirmation of the momentum swing upward. So right here, we do have a buy signal, but I wouldn't enter it yet because it's so close to the zone right here. So it's only about 21 pips from the zone. I would wait for it to break this zone right here. And then once it closes above it, you can enter a buy for like about 1,200 pips. But personally right now, it's kind of indecisive because, you know, like I mentioned, the pivots are crossed over. Like in order for it to be trending up, the pivots all have to be angling up and they have to be spread out like they are right here. Let me just close this. Just clean up the chart. So right here, when price is above the pivots, they're all angling upwards and they're spread out like they are right here. You know, obviously it's in an uptrend. But you know, looking at the overall trend from the trend meter down here, this is the intraday settings. It's blue right here. So when it's blue, that means that the trend is indecisive or it's in consolidation. So that just, you know, that just adds confirmation to what I just mentioned earlier, that there's no established trend right now because the pivots are crossing over like they are right here. As you can see right here, they're crossing over and you can see price was just in consolidation. Once price broke above it, it went into an uptrend. Same situation right here. Once price broke above it, went into an uptrend. Broke below it, downtrend. Started crossing over right here, consolidation. So right now, this would still be considered consolidation until it breaks above it right here. Tony says, does higher time frame give better entries for indices or just stick to lower time frame? So Tony, it just really depends on how much risk that you can handle. You know, obviously, if you want to trade on the higher time frame, it'll be a lot more accurate, obviously. But the problem with trading on the higher time frame is that, you know, you gotta be able to eat this drawdown right here because your stop loss would be down here for like 2,000 pips. I know that DAX moves like 10 pips per second, so this is a lot of risk. It's probably like 3 times the if you could, yeah, obviously the higher time frames would be better. But generally what I like to do is I like to draw my zones, you know, all over. I like to analyze it from a top-down analysis. So I go from the 4-hour and then you can drop down to the 1 hour. And then see, it's even better right here because you can see that the trend is already crossing on the lower time frames. So basically, you know, if it's pushing up on the lower time frames, it's going to follow through on the higher time frame. So that just gives more confirmation to our analysis that we're in a buy bias right now. So if you're trading, I know because you mentioned if you trade on the shorter time frame, generally I like to scalp indexes because indexes, they're just too expensive to trade. You know, unless you have a big account, it's very risky to trade an index on the higher time frame. So generally, like I mentioned, I like to trade on the 10-minute. So I go here on the 10-minute, and this just gives extra confirmation that it's too close to the zone right here. So what happens right here when it gets to the zone, it's going to come up, and it could either, you know, reject off it right here, or it could come up here and reject off it. But like I mentioned, I like to trade on the 10-minute. So I use the pivot strategy. I'll turn on the momentum indicator. Let's see, it's loading up. And it looks like we actually missed the entry. So if you were taking this entry right here, you know, you could have taken this right here and it looks like it would have hit TP for a pivot entry or a nearly full TP right here for about 600 pips. And then again, right here, there's another entry right here, right? So if you took this on the 10-minute, same situation, would have hit full TP, shortly for 600 pips. And that's how you can trade on the lower time frame. So generally, that's how I trade. I'll start on the 4-hour, do my analysis, draw up my zones, because obviously the zones on the higher time frames are going to be stronger than the ones on the lower time frame. But then once you go lower, so you go to the 1 hour, you can see that it's pushing up for an uptrend, right? Go to the 30-minute, it's already pushed up for an uptrend. 10-minute, it's clearly in an uptrend already. So I mean, it'd be too late for an entry. Maybe if you caught this right here, it would have been a great entry because it went straight to TP, literally no drawdown. Again, same situation right here. If you took this trade, 600 pips easy. And that's if you're familiar with the pivot strategy, which is super simple. Basically, the pivot strategy is, for one, you identify the trend using the pivots. Price is trending up right here because price is above the pivots. The pivots are spread out and they're angling up. Easy uptrend. Second, identify a retracement. So right here, you can see price was trending up. It retraced up from this area right here. So it came up, retraced down. Requirement number 3, confirm a rejection. So price came down from this retracement, rejected right here off the K2 pivots. And then the last requirement, a buy signal. Once we got a buy signal right here, you could have taken this buy and then it went straight to TP. So real simple, guys. If you have access to the indicators, you have access to the strategies, and that same strategy that I just discussed right now is on the course. So if you have access to the course, you just go to K2 scalping strategies right here, the K2 pivot scalping strategy, and then that same strategy could be used on all time frames. So it can be used for scalping, intraday, or swing. It's really up to you on how you want to trade it. But yeah, I mean, I wouldn't take this trade right now because it's getting close to the resistance, so odds are it's probably going to reject off it. So in that situation, if it rejects off it, it's probably going to get a sell signal, right? And then if it gets a sell signal like it did right here, it's just going to provide for another pivot entry. So you get a sell signal, so price is trending up. You get a sell signal, that'll be the retracement. You'll probably get a rejection of the K2 pivot area right here, another buy signal somewhere over here. And then once you get that, it'll probably shoot up even further for another buy position. So yeah, if you're watching this, it could, it could be a really good trade. But yeah, so that looks like that's it for the questions right now. I don't know if you guys have anything else. It is 5:44 right now, so I'm probably just going to scan the charts until other questions come in. But we do have news coming in about less than an hour, so 40 to 30 minutes, 30 to 40 minutes. There's going to be high impact Aussie news for the GDP, and that's for sure going to affect the market. So I'm not going to call any trades right at 6. I might hold off to maybe 7, or then I might even hold off longer until like possibly 10 p.m. for the next 4-hour candle. We'll just have to wait and then see how the market reacts to the move, because it's just too risky for us to enter any of those trades right now. But yeah, so I was looking at OddCat earlier. It doesn't look like there's going to be an entry. In order for there to be an entry here, we'd have to have a buy signal. So I'm going to take that off. Here's our odd CHF. Looks like it's still pushing up to TP2. I mean, the only problem with this is that it's going to, the news is supposed to be bad for the Australian dollar. So the problem with this is that it might shoot on downwards. So I'll probably send out a warning to the group in a little bit. Actually, I'll do that right now since we're not really doing much. But yeah, if you guys have any questions, feel free to put them in the Q&A. Otherwise, I'm just going to scan the charts for any possible entries. So I'll just screenshot that, send that to the group. And then I'll just put a reminder there. Let's see. That right there. There's high impact news coming in about 30 minutes, 40 minutes. Remember to move your stop loss and profit. So I sent that out. Forward that to all the groups. All right, so it looks like we're good. I think that's it for now. So let me just keep looking through the charts. Let's see, Jpy. This is nice right here. I actually like this. So I like this because we're getting a retracement signal right here. So once this closes, then I just need to wait for a buy signal. So if you get a buy signal right after it, then I'm anticipating a shoot up. So it's similar to the GJ I was analyzing earlier. This would be a nice entry actually. So I'll keep watching this. I have a marker next to it. Odd NZD, this is actually really good too. So the only problem is that news is coming up soon. So, I mean, I would want price, see if price closes below the zone right here, then it would provide for a K2 zone entry. So I take a short position right here. Stop loss would probably be somewhere around there, 57 pips. But we would have to wait for the news to pass before we decide to enter this trade. So I'll hold off on that. Yeah, our odd USD, all of us got out at TP1. I know there's some people that are still in the trade. But this is a really risky trade because of the news that's coming up soon. This is probably going to spike down. So hopefully you guys got out already. I mean, if you guys are still in it, I mean, I don't want to recommend you guys to close it for a loss because, you know, the total opposite could happen. This could spike up due to the news. But who knows? Like, it's going to be hard to determine. Because the forecast is supposed to be really bad, but you know, COVID is actually getting, I mean, it's not getting better, but it's not as bad as it was, you know, a couple months ago or last month even. So I don't think it's going to be this horrible. But I mean, we'll see. We'll see how it plays out. I mean, there's no way to really predict news unless you're a time traveler or something. Like a lot of people like to trade news, but it's when you trade news, it's literally gambling. You're not really, there's no strategy to it. I mean, fundamentals, you know, obviously fundamentals are fundamentals, but the thing is, you never know how price is going to react to news. Like the news could be good and price could go the complete opposite, or news could be bad and it could go complete opposite. And that's why, you know, I just don't trade news because it's too risky. Euro odd, nothing there. Let's see, Euro Cad. It's a lot of space there. Let me see where the next K2SR is. It's too close, so I'd have to wait for this to close below before I take an entry. So if this closes below here, then it'd be a prime sell entry, and then it could be a bit it'd probably be a good move, but it's about 42 pips away, so it's a long time before it's going to reach that point. Euro CHF, this is actually a good buy entry. The only problem is that it's so close to the next K2 zone right here for 20 pips. So the problem with that is if I enter this trade, you know, I don't want to enter this trade and then it ends up reaching the zone right here and then rejects off it. Hold off on that. This is a nice sell entry right here for GBP. Let's see, I'm just going to mark it because it is a good entry. I just need to find the next zone because obviously, like I mentioned, I don't want to trade if price is too close to the next zone area. It actually looks good. So the zone area isn't close at all. It's way down here. Let's go back to the 4 hour. Turn off the SRs. I mean, it's only 25 pips, but with EG, it's actually worth a lot more since they're both pretty expensive pairs. $28 pips. All right, yeah, this could be a good entry, but I'm going to wait for the news first before we decide to take this. Yeah, EJ still looks like a good buy. You know, similar to the other JPY pairs. I would just have to wait for it to close above. Euro NZD. I was gonna call this trade. I don't remember. Oh, it was too close to the SR, so I was gonna call it from up here. I mean, technically we could have taken it. We could have locked in like well over 55 pips right here, but it was just too close for me because I think my stop loss, yeah, was going to be about 100 pips. So that would have been an issue for me because we wouldn't reach, I mean, we would have reached like TP2, but it wouldn't have pushed down further. Your GBP odd. Yeah, good thing I didn't call this. That would have been bad. GCAD, good thing I didn't call that either. Same with GC. The market's just moving weird past 2 weeks. It's hard to really determine when the market's going to be good, when it's going to be bad. It's random. Like the past 2 months were great, and then the past 2 weeks were just, they weren't horrible, but they weren't great. Yeah, it looks like everything is still pretty decent right now. But yeah, it looks like it's about it, guys. So it looks like we're done with the questions. I've analyzed all the pairs right now, so I have a couple lined up. I'm looking at GN for a sell. If we get a sell signal there, I'm looking at EN. Well, I've already looked at it, but it's too late for that, so I'll just uncheck that. EG, I'd be looking for a sell right here too. AN, looking for a sell if it closes below the zone. We'll see if that happens. And then JPY, I would take this for a buy if we get a buy signal. But it doesn't look like that'll be happening anytime soon, so I'll just take it off for now. But yeah, guys, it's about to be 6, so we've been on for about 2 hours now. If you guys have any other questions, it looks like we're done for the day because I don't have any more questions in the Q&A. But if you guys have any other questions, feel free to reach out in the Telegram, and then I can reach out to you and I can answer your question. But yeah, guys, thanks for showing up. Just a reminder for you guys that are new here, this happens every Tuesday and Thursday at 4 p.m. Pacific Daylight Savings Time. And, after this happens, then I post this on YouTube and I'll post it to the group later if you guys want to rewatch it. So if you guys missed any other webinars, they're all available on the K² YouTube channel. So if you guys want to access that, just go ahead and go to our YouTube channel and they're all available. But yeah, guys, thanks for showing up. Just a reminder, if you guys have any questions, feel free to reach out. I'll be available in the chat. But yeah, guys, talk to you guys in a little bit.